On the 19th of March, Binance, one of the largest crypto exchanges in the world, announced that it would be temporarily suspending its spot trading services for some of its customers. This announcement raised concerns among investors, with many believing that Binance may be planning a scam. In this video, we will explore the reasons behind Binance's decision to stop spot trading and examine the investor concerns that have arisen. Spot trading is the buying and selling of cryptocurrencies for immediate settlement rather than a future date. This type of trading is popular among individual investors and is the most common form of trading in the cryptocurrency market. Binance's decision to stop spot trading was motivated by the need to comply with regulatory requirements. The exchange has been under investigation by regulatory bodies in several countries, including the United States and the United Kingdom, for allegedly failing to comply with local laws and regulations. Binance's move to suspend spot trading was aimed at reducing its exposure to regulatory risks. The exchange has suspended spot trading services for users in Singapore, Italy, Germany, citing evolving regulatory compliance requirements as the reason for the suspension. The exchange stated that it would provide its customers with a 14-day notice before the suspension takes effect. Despite Binance's explanation for its decision to suspend spot trading services, many investors remain concerned about the exchange's motives. Some investors believe that Binance is planning a scam and that the suspension of spot trading services is just the beginning. One of the main reasons why investors are concerned about Binance's motives is the lack of transparency from the exchange. Binance has been criticized for failing to disclose information about its operations and finances, including details about its executive team and ownership structure. Investors are worried that Binance may be concealing information that could be detrimental to their investments. Binance regulatory issues have been a cause for concern among investors. The exchange has been accused of failing to comply with local laws and regulations in several countries, including the United States and the United Kingdom. Investors fear that Binance's regulatory troubles could lead to the exchange shutting down, taking their investments with it. Binance has had previous issues with security and transparency, which has led to some investors losing trust in the exchange. In 2019, Binance suffered a major security breach, which resulted in the theft of 7,000 bitcoins. The exchange was also criticized for its lack of transparency during the incident, which led to some investors losing faith in the exchange. Binance has been accused of engaging in insider trading. In May 2021, it was reported Binance was being investigated by the U.S. Department of Justice and the Internal Revenue Service for possible criminal violations, including insider trading and market manipulation. This has led some investors to question the integrity of the exchange and whether their investments are safe. Insider trading is illegal and involves buying or selling securities based on information that is not available to the general public. If Binance is found guilty of insider trading, it could result in the loss of trust from its customers and regulatory action. Many investors have complained about the lack of customer support from Binance. Users have reported difficulties accessing their accounts, issues with withdrawing funds, and long wait times for customer support. This had led some investors to question whether Binance is capable of handling their investments properly. Investors need to have confidence that their cryptocurrency exchange can provide timely and effective customer support, especially during times of uncertainty. If Binance continues to fail in this regard, it may further erode investor confidence and lead to more concerns about the exchange's future. Binance has been criticized for its lack of clarity about its business model. The exchange has a complex structure with multiple subsidiaries and business units operating across different jurisdictions. This has led to confusion among investors about the exact nature of Binance's operations and how it generates revenue. Investors need to understand the business model of a cryptocurrency exchange before investing in it. Without this knowledge, investors may be exposed to risks that they are not aware of. Binance needs to provide more clarity about its business model to restore investor confidence and reduce concerns about the exchange's future. Binance faces increasing competition from other cryptocurrency exchanges, which may lead to decreased market share and revenue. Investors may be concerned that Binance's recent decision to suspend spot trading services is a sign that the exchange is struggling to keep up with its competitors and may be on the verge of collapse. Cryptocurrency exchanges are under constant pressure to innovate and stay ahead of their competitors. If Binance fails to keep up with the competition, it may lead to a loss of confidence from investors and regulatory bodies. Binance's recent decision to suspend spot trading services has led to concerns among investors about the exchange's motives and future. Investors should exercise caution and do their due diligence before investing in any cryptocurrency exchange. And with that being said, it's time to end our video. Subscribe to the channel for more amazing videos like this. We'll see you with another interesting video.